Welcome back, and it's time for another Macro Monday where I get you ready for the week ahead in 5 minutes or less. Just a reminder, as always, this is just a small snippet of our full Macro Monday newsletter. I will post a link to that in the description of this video. So if you want more in-depth coverage of the week ahead, that's where you should check out. Before we get started, hope everyone enjoyed their July 4th weekend, at least our American watchers. I know I had a great time with family. I hope everyone else did as well. Okay, so into our chart of the week. There's not a lot of data this week, as you'll see on the next slide when I get into the calendar. So we're going to talk a little bit about employment week last week. So June payrolls beat expectations, but the real storylines are in the details. So a couple things I want to point out. Foreign-born labor force shrank for the third month in a row. It's tough to draw hard conclusions from this, at least right now, but it does suggest that stepped up deportation efforts are indeed having an impact. Number two, the unemployment rate ticked lower, which points to a tighter labor market. That's what we talked about in last week's Macro Monday, was how tight the labor market was and how this was kind of a pivot point. And what we got was a lower unemployment rate, which means tighter labor market. And that also matches, which brings us to the chart today, the signals we are receiving from the quits rate in the JOLTS report and the few or no qualified applicants reading from the NFIB. So why is this important? If these trends hold and the labor market remains tight and continues to retighten, we could see wage inflation set to reaccelerate. On top of potential tariff-fueled inflation is an interesting mix here with the Fed, tight labor markets, potentially increasing inflation. That's not a recipe for rate cuts. And we'll talk a little bit about that on the calendar on this next slide. So here is this week's key economic data releases. As I said, very, very quiet week on the data front. Gives us the week to get back in from the long weekend. A couple things I'll point out. Tuesday kicks off with the NFIB Small Business Survey. If you've been watching our videos for any time, you know we love this survey, especially the single most important problem subcomponent. In general, this whole report is a useful read-through for small business earnings and inflation sentiment, particularly right now as smaller firms are struggling with tariff costs. And then one other thing I'll point out, again, not much to choose from, but after last week's better than expected labor market data, as we mentioned on the last slide, the odds of a September rate cut dropped from 92.5% to 68.5%. So the market is still expecting a cut in September, but it is much less sure. So if we continue to see labor market tightening, or we start to see some spikes in inflation, I expect that number to move a little bit lower. And while all this is in flux and we're sort of trying to figure out where the Fed is heading next, and since it'll be a quiet week, we'll pay some attention to the FOMC minutes on Wednesday as those come out on 2 p.m. at 2 p.m. on Wednesday. We'll see if there's sort of anything to pick up, which way the Fed might be leaning one way or the other. And again, hope you guys enjoyed your July 4th weekend. This is where I'm going to end it. Thanks for watching. Obviously a short one. We didn't have a ton of data to talk through. Don't forget to subscribe to the channel, and I will be right here next week, next Monday, with another Macro Monday. All right, have a great week, everyone.